Hey everybody, Economic Ninja here. I want to talk about real estate today. I think this is really exciting, quite frankly, because we're seeing, I've been talking about how mortgage rates have been rising, and they've been rising completely separately from what the Federal Reserve is doing, okay? The Federal Reserve was threatening to raise rates. They still have not raised their benchmark rate yet, the federal funds rate, yet interest rates on mortgages have just skyrocketed in the last 60 days, okay? Now, this is going to have a severe consequence. We're going to talk about that. This is out of CNBC. It says mortgage applications dropped to the lowest level in over 2 years. Now, I'm going to explain, we're going to hit the bullet points, but how this is going to severely, severely hurt some people. They're going to lose their jobs, and we'll go into that. All right, anyway, key points. Total mortgage applications decreased 13.1% last week to the lowest level since December of 2019. First off, guys, I want to explain something. In 2019, the economy was not doing well. Most people do not understand that. In 2019, by September of 2019, the interbank lending rate had spiked to 12.3 or 5%. I don't remember off the top of my head. That meant that banks, the situation in the economy was so dire, the banking sector was in so much trouble that the overnight lending rate, the rate in which banks figure out, hey, we're going to loan you money overnight so you could settle up with the Federal Reserve to make sure that you have your proper amount of cash, your deposits, versus how much debt you have out, right? It was so bad that that interest rate spiked to 12.5%, which normally it was sitting, I think in those days, I don't know, 4.5%, 5% overnight, because no banks trusted each other. They did not. So they go, hey, well, I don't trust that tomorrow you're going to be able to pay me back. So I need more interest. That was insane. And then yet a month later, some crazy thing happened, came out of China, changed the whole world, and allowed the Federal Reserve and other central banks to jump in there and give the money, just give tons of money to the banks. Got to make you think, doesn't it? So the point is, by December of 2019, things were bad. All right. So this says mortgage applications dropped to the lowest in 2 years. So they were using December of 2018 as the benchmark. Okay, it hasn't been this bad since December of 2019. All right, next bullet point. The average contract interest rate for a 30-year fixed rate mortgage with conforming loan balances, which is 647,000 or less, increased to 4.06%. Okay, that is a lot of money to pay, interest to pay on a house that is just keeps increasing in value, okay? I want people to understand that in the last 60 days, mortgage rates have went, a conforming mortgage rate, from 3% to 4%, all right? And that, now think about this. That's on a house that's probably went up another $10,000 or $20,000 in that amount of time, and your income has not, okay? So think about that. The people that are buying right now, that are out there, they are panicked and they are not thinking clear. It harkened me all the way back to 2005. It says applications to refinance dropped 15% weekly and were 56% lower than 1 year ago. Now, here is what I want to say. Here are the facts. I said about a week and a half, 2 weeks ago, when I started talking about the interest rates on mortgages, that the March numbers are going to come out for February, and they are going to be staggeringly low. Staggeringly low. I mean, nobody is going to refinance. No one's going to refinance unless, and I'm telling you, this is what's scary. If you see people refinance from let's say a 3.25% mortgage into a 4% mortgage, I can guarantee you it's only for one reason. It's a cash out refi, and it means they are desperate for money. That is a bad sign as well. So think about this. You are going to have no refis with the March numbers come out for February. The February numbers come out in March, I mean. What is that going to do to the mortgage sector? Companies are going to start laying off people in droves. And not only that, I mean, you could look at better.com and you know how that CEO just decided on a Zoom call to just lay off 900 people nonchalantly during a Zoom call. But I just want people to realize too, because they were going public and they wanted to clean up their books before they went. The truth is that more companies are going to be laying off people because they're not going public like better.com, but they are hurting for cash flow. Their cash flow is not there if they're not writing loans. So now you have more people laid off, and they're going to be hitting the unemployment. I don't blame them. And it's going to put more of a stress on the economy, and they're going to be spending less because they're on unemployment. right? So what I'm saying is this, think about the narrative this is building month after month as we go into summer. And remember, as we go into summer with extremely high fuel prices, already, right now, $100 barrel of oil almost, high taxes, high gas prices, but we aren't even in peak vacation season. This is literally the perfect storm. Do me a favor, hashtag if you made it this far, the perfect storm in the comment section below, along with Ninja Nation. Because I want people to understand this, not only to, it's not to panic, it should move you to do something. It should move you to save more. It should move you to not get into debt. It should move you to think farther out right now in the future and then start to get that shopping list. I want a bigger house. I want a house. I want a legacy house, a generational wealth home for my family, maybe a ranch, something like that. Something you never thought possible. This is not time for Lambos. It will be. There'll be that day, and we'll be doing videos about it. It'll be awesome. It'll be fun. But the facts are, you can't stop what's happening. I want people to see the big picture. All right, guys? Thank you so much for watching. The Economic Ninja is out.